5 must-have investments during inflation. Hey guys, today we're going to list 5 must-have investments during inflation. Let's get right into it. Number 1, real estate. Certain tangible assets are among the best investments for inflation protection. While it may seem absurd to buy a toll bridge yourself, investor Warren Buffett once stated that a toll bridge would be his favorite thing to own in an inflationary world because you would have already built the bridge and could raise prices to offset inflation. Purchasing real estate is an excellent way to protect against rising inflation. Once you own a property, you can lease or rent it out as the housing market prices rise and profit from it. Investing in property leases or rental generates income, which may exceed overheads and payables depending on the location of your property. Rent increases may be beneficial if your property is in a desirable or prime location. It's also important to look for mortgages with fixed interest rates, which ensure that each regular payment is based on the dollar amount when your mortgage was first established. As inflation rises, so does the amount of monthly amortization you must pay. Let's look at how a fixed-rate mortgage can help you hedge against inflation. Assume your monthly mortgage payment is $10,000. At the moment, that sum could cover 30 months of groceries. Your mortgage payment will still be $10,000 in 20 years, but that amount may only cover 8 months of groceries in the future. Property owners may profit in the future if housing prices continue to rise in an inflationary environment. If you have the capital, owning real estate is one of the best inflation investments. Number 2, gold. Gold has always long been regarded as an inflation hedge. Indeed, many people have looked to gold as an alternative currency, especially in countries where the local currency is losing value. When their own currency fails, these countries tend to rely on gold or other strong currencies. If there's one investment that can fight against any sort of inflation, it will be gold. Gold is a real, physical asset that, for the most part, holds its value. Gold can also be purchased directly from a bullion or coin dealer, or indirectly by investing in a gold-related mutual fund or exchange-traded fund. Gold, on the other hand, is not a true perfect hedge against inflation. When inflation rises, central banks use monetary policy to raise interest rates. Holding an asset that pays no yield, such as gold, is less valuable than holding an asset that does, especially when interest rates are higher, implying higher yields. When it comes to protecting yourself against inflation, there are better assets to invest in. However, diversification is essential in any strong portfolio, and if you're considering investing in gold, the SPDR Gold Shares ETF is a worthwhile consideration. Number 3, bonds. Bond investing may appear counterintuitive given that inflation is typically detrimental to fixed-rate debt. Inflation index bonds, on the other hand, offer a variable interest rate tied to the inflation rate. Treasury inflation-protected securities, which are pegged to the Consumer Price Index, are a popular option in the U.S. TIPS investments increase in value as the CPI rises. Not only does the base value rise, but because the interest paid is based on the base value, the amount of the interest payments rises as well. Other types of inflation index bonds, including those issued by other countries, are also available. Inflation index bonds are available in a variety of forms. TIPS can be purchased directly from the U.S. Treasury or through a brokerage account. Some mutual funds and exchange-traded funds also hold them. Consider junk bonds for a more aggressive play. When inflation rises, the value of high-yield debt rises as investors seek the higher returns offered by this riskier-than-average fixed-income investment. Number 4, commodities. Commodity prices such as gas have reached all-time highs around the world. Russia's invasion of Ukraine caused oil prices to skyrocket as countries agreed to sanction Russia's economy. Oil price increases have an impact on the global supply chain, the airline industry, and even consumer spending. Are these investments a good buy during an inflationary period? Commodities such as precious metals, industrial metals, and oil are typically the best performers during market periods of rising inflation. Commodities do not generally correlate with the stock market, which could be advantageous for stock investors seeking diversification. Crude oil has the strongest correlation with the Consumer Price Index or CPI. Outside of gold and silver, it has also become the most invested commodity through ETPs. Number 5, loan/debt obligations. Leverage loans can also act as inflation hedges. They are a floating rate instrument, which means that banks or other lenders can raise the interest rate charged to keep up with inflation. Mortgage-backed securities and collateralized debt obligations, which are structured pools of mortgages and consumer loans, are also viable options. Investors do not own the debts themselves, but rather invest in securities with loans as underlying assets. MBDs, CDOs, and leveraged loans are sophisticated, somewhat risky instruments that frequently necessitate relatively large minimum investments. The most practical option for most retail investors is to purchase a mutual fund or ETF that specializes in these income-generating products. That's all for today, and we'll be sure to catch you all in the next one.